Hi, welcome to the March 2025 Real Estate Market Update brought to you by the Reby Homes team. Well, this feels like the first market update in a while where I'll be bringing you some new information. Finally, there's some movement in the market and it's great news for buyers. Let's start by taking a look at home prices across the country. This is a graph that dates back to 2019, and we can see the steady trend in prices pre-pandemic, then of course that outrageous spike in 2020 that we all remember so well. And following that spike came a correction in mid-2023 as interest rates jumped up and the demand was pulled way back. Since then, however, we've seen a return to that slow and steady year-over-year appreciation that's much healthier and sustainable. This is great for the buyers who have their budget ready to go and are just saving for a down payment, because we're in a place where prices are likely to remain fairly stable, although they're still expected to increase gradually. This is a home price forecast from over 20 different entities in the industry, and they're estimating home prices will rise at an average of 2.7% this year. Of course, these kinds of forecasts change regularly and are almost always wrong, and they change as the market does based on interest rates, inflation, unemployment, now tariffs, and more. So although it's interesting to see a glimpse into the future, just keep in mind that it'll probably fluctuate. Now let's talk about everyone's favorite subject, mortgage rates. Here's a look at mortgage rates from the start of this year to the end of February. We started the year at that familiar 6.9% range, and it stayed around there until the first week of February when we finally saw some relief. And now we've seen 6 straight weeks of declines. That's roughly a $60 a month savings for a $400,000 home, which is a 20% decrease from the peak of 7.04% in mid-January. Now, do we expect a $60 a month savings to make or break someone's decision to buy? Probably not, but it could shift the overall mindset of buyers. We know there are tons of buyers that have been sitting on the fence waiting and hoping for rates to come down, and now they are. Faster than expected, actually. Forecasters expected to see rates remain in the high 6.9% range all the way through Q1, then have a slight dip to 6.8% in Q2, a little more hitting 6.68 in Q3, and then ending the year in the mid 6% range. So we're currently at a national average of 6.7%. That's where they were expecting to see us in Q3. So this is very hopeful. Of course, we can expect to see fluctuations in these rates, so don't get too comfortable, but be prepared to make a move if and when it makes sense for you. Let's take a look at how rates can affect payments to get a better sense of why even a quarter of a point can have an impact. This graph shows 5 different loan amounts with 8 different rates and the payment that goes along with each rate. So let's say you're someone looking to stay around $2,500 a month for your mortgage payment. At 7%, you can qualify for a $380,000 home, but just a quarter of a point less at 6.75%, you're now qualified for a $400,000 home. So it does make a difference in affordability and budget. Keep in mind these numbers reflect principal and interest. It doesn't factor in taxes, insurance, HOA, or any other monthly expenses. So it's always best to speak with the lender and get the most accurate numbers. However, this is still a great broad overview of the impact that minor rate declines can have on monthly payments and affordability. If we continue to see inflation slow this year, then we can expect rates to continue declining. Weaker economic growth can also play a part in the decline of interest rates. Despite mortgage rates moving in the right direction, we're still very far from where we were in the frenzy when rates were 4% or below, and it's highly unlikely that we'll ever return to that environment. So if that's what you're waiting for, then you may be waiting forever. Overall, the movement we're seeing is positive, and we'll continue to monitor the market and bring you updates. Now let's take a look at our local market here in the Phoenix metro area. Active listings are up and they're at their highest point in over 5 years, with just under 23,000 available homes, and roughly 19,000 of those are in Maricopa County alone. So what does that mean for buyers? More options and more flexible sellers. Those who are out house hunting right now are seeing a different side of sellers, one that's much more understanding of market conditions and willing to offer more to help buyers secure a home. With rates remaining painfully high, many buyers have been forced out of the market altogether, which has left demand lower than usual. So more supply mixed with lower demand gives us some relief on prices, which is much needed for those buyers who have been pushed out or too discouraged to even try. Along with price relief, sellers are offering concessions to help alleviate high monthly payments, and this entices more buyers to commit. February ended with 48% of all closings having some sort of concessions to the buyer, with an average amount being around $10,000. That $10,000 can often help buyers offset their monthly payment by a couple $100 or save them out of pocket on closing costs. If you're unfamiliar with seller concessions, it's essentially a credit from the seller to the buyer that can be applied towards certain things. One of those things is a rate buy down, so you can use the credit to buy the interest rate down, either permanently or temporarily, or it can be used to cover closing costs, prepaid taxes, insurance, HOA fees, etc. So it's really beneficial for buyers who either want to save on their monthly payment or need a little more cash out of pocket. Historically, seller paid closing costs were around 30%, and the average amount was about $5,000. So the jump to almost 50% of homes offering an average amount of $10,000 is telling as far as buyer affordability. A quick look at foreclosures just to serve as a reminder. This chart shows notices of trustee sales, which measures the number of folks who are at risk of foreclosure. February of this year had a total of 388 notices filed. March of 2009 had 10,900 notices filed. So I show this just to offer some peace of mind to those who might be fearing a crash. Arizona homeowners are in a strong, equitable position. This is a look at annual sales in Arizona, which tells us a few things. One is volume, how many people are buying and selling homes compared to previous years. And the other thing it tells us is what types of sales are occurring. Are they normal sales, investor purchase, short sales, or foreclosures? Blue is normal sales. So for the most part, although volume may be low, it's by far almost all normal sales, meaning folks that might be struggling have enough equity to sell and get out of a bad situation before having to short sale or foreclose. Many of them are still able to walk away from their home with some sort of cash in their pocket. So very, very different than 2008. The average days on market in February was 79. That's right where we were this time 2 years ago in 2023. With more inventory coming on the market, however, we can expect to see that number climb a little. So sellers be prepared for longer on market times as buyers take their time finding the perfect home for them. Average sales price per square foot is up year over year about 7% overall, but we need to dissect this a little bit further. This graph accounts for all price points, all types of sales, and all sizes. So don't make the mistake of thinking that your home appreciated 7% over the last year. If we adjust to single family homes under a million and 2,000 square feet or less, we get 3%. Keeping all that the same, but looking at homes under 600,000, we get 1%. Same for homes between $500,000 and $800,000. So not much appreciation over the last 12 months for most people. If we take a look at 3-month moving average, however, we can get a much better idea of why the concern of a crash remains very low. Over a 3-year period, we're up 11%. But if you've owned your home for 5 years or more, you're up at least 42%. So yes, over the past couple of years, appreciation has slowed significantly, but we're not pretending real estate is known for a quick return. Most of the time, it's a long-term investment, and any good agent will tell you that before you make any decisions. That's why, despite the slow market, price reductions, and high seller concessions, sellers are still coming out on top. Of course, things in real estate can change fast. If rates dip even 0.5%, it puts a new wave of buyers into the market that have been pushed out, which can increase demand and tighten up the seller incentives. So our advice remains the same. Buy when the time is right for you. If you have a good plan and the ability to see it through, then market conditions don't matter as much. There are opportunities in all markets. And you never know what next month will bring, but we'll be sure to keep you updated. Until then, we're here to answer any of your real estate related questions or provide you with specific data, so please don't hesitate to reach out. Thanks so much for tuning in, and we'll see you next month.